Gold has long been considered a valuable asset, but why are central banks around the world still accumulating it today? In this video, we'll explore the various reasons behind this trend. First and foremost, let's examine the role of gold in the global financial system. Gold has traditionally been viewed as a store of value and a hedge against inflation, due to its limited supply and the inability to easily manipulate it like paper currencies. Gold has retained its value over time and has often performed well during times of economic uncertainty, making it an attractive asset for central banks to hold in their reserves. Central banks hold gold as a reserve asset for a number of reasons. One of the main purposes of holding gold is to diversify their portfolio and provide a buffer during times of economic uncertainty. For example, during the financial crisis of 2008, gold prices spiked as investors sought safe havens for their money. By holding gold in their reserves, central banks are able to protect against potential financial losses and help ensure the stability of their economies. Another reason for central banks to hold gold is to support their own currencies. Some central banks use gold to back their domestic currencies or to stabilize exchange rates. This can help to build confidence in the currency and ensure that it maintains its value. For instance, the International Monetary Fund requires its member countries to hold a certain amount of gold in reserve in order to maintain the stability of the global financial system. By holding gold, central banks can demonstrate their commitment to the stability and strength of their currency, which can help to build trust among investors and market participants. But there's also a growing trend among central banks to use gold as a tool for monetary policy. By buying or selling gold, central banks can influence the supply of money in the economy and achieve their policy goals. This can help to manage inflation, stimulate economic growth, or achieve other policy objectives. For example, by selling gold from their reserves, central banks can increase the supply of money in the economy and potentially stimulate growth. On the other hand, by buying gold, central banks can reduce the supply of money and potentially curb inflation. Finally, some central banks are increasing their gold reserves as a way to reduce their dependence on the US dollar. The US dollar is the dominant currency in the global financial system, and central banks hold it as a reserve asset. However, with increasing trade tensions and political risks, some central banks are looking for alternatives to the dollar. Gold, with its long history and global acceptance, could be seen as a more stable and reliable option. By holding more gold in their reserves, these central banks can reduce their reliance on the dollar and diversify their portfolio. This can help to protect against potential losses and ensure the stability of their economies in the face of uncertain global conditions. So, these are some of the reasons why central banks are accumulating gold. It's not just a precious metal, but also a strategic asset with many functions in the financial system. Do you think central banks should hold more gold in their reserves? Let us know in the comments.